What we're focused on are open decentralized systems. And that's where you can create new economies and new commercial models, right? I'm not a big fan of blockchain replacing a current commercial model, or just automating that current commercial model. So we're looking at blockchain where it creates new models. Now, when you say that, then you say, okay, well, there's currently not a single pan-industry platform that's open and decentralized. There's nothing, not one single one. So we have lots of companies out there talking about, oh, we're doing blockchain, and they're really not. So when you get that definition understood, open decentralized systems, that's what we want to look at. Now, there's a lot of opportunity. There's a lot of opportunity around providence. There's a lot of opportunity around asset management. There's a lot of opportunity around finance. If I go specifically into the real estate side, I think there's significant opportunity, because if you look across the value chain, if you look at digital, how many steps you want to take through that value chain, most of the digital companies only play in one of those steps. So they're not really fixing the inefficiencies that we see in real estate. And partly because no one would ever allow a single company to do that. You wouldn't king make it. They don't want a company controlling the entire real estate value chain. So it lends itself to open decentralized. And then if you can say, I can get into open decentralized, now you can mitigate a lot of these intermediaries that don't need to exist, like titling. Why do we have titling? Why? There's a $50 billion industry in the United States. It doesn't need to exist. So there's huge opportunity. Now, there's a lot of regulation that sits in behind there, but there's huge opportunity that you can go through. And then you need to think about, if you're going to do that, you have to understand all the value chain across. You have to understand what the technology is all the way across. And then you have to understand what you can decentralize. And then you have to understand what the commercial models are. Very few businesses I see get to that, but if you can, then you have real opportunities.
So you noted the regulation issue, and Mo, I know you're active in this space, and regulation is clearly one of the challenges. Can you maybe talk us through what you've seen and in that regard?
Yeah, definitely. So from a regulatory perspective, maybe just bridging what Jeff talked about, I think there's real use cases and problems that exist within the asset class. And solving for that requires understanding what technology exists today. But another thing to focus on is just behavior and how behavior is changing, especially for us as humans. And the most recent example of that is just the shared economy, the recent rise of being able to share cars with someone, Airbnb, even things like WeWork. And if we apply that framework or the change in behavior that we're anticipating, new economies essentially forming, I think real estate is one of the most important ones that we touch every day. And title is maybe a great place to start, but not necessarily where you want to end. So if you are able to go through that entire stack, find out what information is required to ultimately get to where behavior will go to, I think blockchain can solve for that. Shifting over to regulation, what Meridio does is create digital shares, and those digital shares need to be in compliance with securities law in the United States, regulation with the FCA in the UK. But blockchain allows for a lot of the regulators to no longer have to worry about things going wrong. And if you think about why that is smart contracts allow for programmatic execution. So you no longer have to worry about someone who is on the OFAC sanction list to be able investing in an asset in London, perhaps. You no longer have to worry about X number of investors coming in, because you can now shift that over to programmatic execution. And that's really powerful, right? Regulators no longer have to be backward looking. They can be proactive in their approach. So regulators are pretty excited, and we've seen a lot of that commentary come out in 2018, and we're anticipating working closely with them in the year to come.
Is that to you talk about regulators, and I posed the question as though there were one block of regulators and they all agree on things, but I guess that just isn't the case. There are lots of different regulators, different geographies, have different approaches. Richard, I wonder if if that's a challenge, different sets of rules.
I think whilst regulation, the specific detail of regulation may differ country by country, essentially they're all trying to achieve the same thing. They're trying to protect the small investor, and that's where the tokenization model that Meridio is working on has to work with the local regulators. And to a certain extent, that means that investors will have to be educated and informed. And I think, irrespective of the geography, the the kind of template, the blueprint for getting regulatory approval will be very similar, even if the exact details may differ from country to country.
Is there a country whose regulator right now seems like they're most receptive or least receptive? Or?
I think that Mo's spending an awful lot more time with the regulators than I am, but I think there are many platforms that are trying to take an edge in this, and I don't know a regulator in a Western market, and in fact also in many of the emerging markets, that isn't discussing this in some shape or form right now.
Yeah, I would say it comes down to where regulators are today and new regulators that are forming. So there are opportunities for folks or regulators that are starting fresh and looking to attract investors and create deeper markets, or perhaps facilitate new economies. I think we've found the UK to be pretty progressive. They're in their 5th cohort of sandbox environment, where they're bringing in young companies who are trying to experiment, but experimenting within compliance. So it's not a sandbox environment where you get to break things. They handhold you and allow you to make sure that you're in compliance. So I think the UK has been pretty outstanding, I would say.
Jeff, just to you're an investor. What would you want to see in this space in order to feel like this is the time to start to really put some money into it?
Well, again, I think we look for industry plays, right? So we're looking for someone we're first of all looking for an industry where there's utility for a decentralized and open sourced play, and it doesn't work in every industry. Real estate, it does, because there's a lot of intermediaries, there's a lot of inefficiencies, and there's a play there where they're probably never going to let a centralized company control any of that. So a decentralized platform would be a big play. Then you got to look for, is the tech ready, right? So Bitcoin is a great piece of technology. We can argue its utility as a currency, and it's kind of, if you will, the first protocol that came out, right? And then Ethereum came along and did some really great things. It added logic to that. It allowed you to build upon it. It improved its performance. But still, there's still some limitations there that we're looking for in advancements in Ethereum, as well as advancements in other protocols that we're looking at. So I think there's real opportunity when you see those advancements. We put some money into Definity. We like that one. But we also, all of our investments right now are building off Ethereum. So it's still a very viable thing. If you look for where you would put money in, you're looking for things where provenance is viable there, so supply chains are big, and things where there's a trust function that's vibrating.
I'm gonna come back to Mo. So you've been participated in actual transactions and can you talk us through what were the issues there, what were the challenges, what you learned from it?
Yeah, so definitely several challenges along the way. The first is really understanding the problems that exist within the asset class and making sure we're building tech to solve for those problems. And that requires deep expertise on our end, but of course working with folks at JLL allows us to really understand what those problems are.
So what were the key problems?
Well, so I think the ones that Richard highlighted, right? The ability or the challenge to close a transaction within a smaller window. And if we can get to a decentralized system where multiple parties are agreeing to, this is the truth behind the lease or the title and other attributes that drive value in an asset, we can close the transaction time ideally. So that's, I would say, one. The second is, of course, the liquidity component. So, maybe Mo was able to get exposure to an asset, but he wants to now get out of it. And the only way to really access the secondary markets is going through a broker-dealer, working with my tax accountant, working with an attorney to be able to get out. And of course, there's complications along that journey. Now, if you switch over to Meridio, where these shares have that encoded compliance built directly into them, I can transact much quicker. So not only am I bringing down the transaction time and costs, but also getting to a more liquid market. So we've had to work very closely with the real estate sort of expertise, and then again with regulators to understand how these securities instruments trade and behave today. So diving into infrastructure with things like the DTC that consider trading and settlement, right? Clearing and settlement, excuse me. So it was definitely challenging from that perspective, but I think one that's going to allow economies of scale in the future.
So can you maybe, Richard, can you maybe try and explain to us, give us an example of a sort of a sort of clear, concrete example of where you would see blockchain being used, the use case in real estate, in connection with capital markets?
Well, I guess I referred to it a little bit in my opening kind of comments. To me, the whether it's blockchain or not, technology has a huge amount to add to create transparency and ease of transfer of economic interests in real estate. And it certainly would appear from my discussions, I'm far from a blockchain technology expert, but from working with folk like Meridio, it's clear that a lot of the technology applications, particularly in the Ethereum blockchain, allowing us to build smart contracts will vastly improve our ability to transfer what ultimately is a collection of a large number of contracts. So every office building is made up of a contract with the managing agent, a contract for repairing a lift, an elevator, sorry, English translation there, whether it's the escalators. It's hundreds and hundreds of contracts sometimes. And you think about a complex asset like a shopping center or a mixed-use asset in a major building, that's what is time-consuming. If you have that all in a smart contract, it's not just about tokenizing assets and creating liquidity for secondaries markets. I think it's about creating liquidity in the asset class overall. So the ease of transfer of entire buildings is also enhanced. And that's going to be great news because real estate trades at a significant premium to because of its illiquidity.
And maybe building on Richard, if you look at, there's lots of use cases in real estate, right? Because every single property on the planet is for sale right now. It's just a function of a price, right? And so if you could put a smart contract to say, I'm going to sell my house at $10 million, and it just sits there until a buyer is willing to pay $10 million, that is a way to create a lot more, share in a lot more addressable market that you otherwise wouldn't have. And then if you can put in smart contracts that can facilitate the closure of that and have assessors or whatever that do that, and then they stake some coins or whatever you want to have, now you can start to really improve efficiency of getting that thing closed. And then you can get into the fractional ownership or the liquidity of selling some of these things out. So you can start to really free up the real estate value chain with blockchain technology.
Yeah, and those costs really allow for that the reduction of those costs really allow for that fractional ownership to be something that you can scale, and that's what we did with our first asset last year. We took a multifamily home, created these digital shares in compliance with securities law in the U.S. again, and 15 investors now own digital shares. Some of these folks don't own smartphones, but because they were so excited about that liquidity component, they're willing to kind of leapfrog. Now, that's great, that's exciting. They can trade with each other, peer-to-peer transfer exists. But what I think will be even more exciting is the tenants that live in that building now could buy some of those shares from those investors, effectively making them not only tenants, but owners of that building. And just going back to new economies forming, I think this is an opportunity for us to really be able to change the way we behave and allow for new economies to form.
Also an interesting advantage that if you're a co-owner of a multi-family unit, you tend to look after your building a little bit more than you might do if you're a tenant walking in and out the door. So there's that sense of community ownership, I think, is a really interesting application and probably goes beyond. It's particularly suited to multi-family, but even things which are certainly much less liquid real estate asset classes like hospitals or local surgeries. It's I think the application for community ownership is something that's quite exciting.
Are you saying I'll work harder if I can own a piece of my office? They can, right? That's what we want to do. So whatever exists for a private placement offering in the United States, maybe a trust vehicle in the UK, we want to take that law and translate it over into logic, into these smart contracts. And I guess going back to the challenges that you talked about, that requires our smart contract developers to be put on the hat of a lawyer. That requires lawyers to really understand code. So that is another challenge that I think is really important to point out.
And the data input generally is part of the issue, right? I mean, real estate in general is it's a mixed bag of raw data.
Yeah, it is. I mean, if you go down to the private, someone who might own a few of their own multifamily assets, maybe they've got $3 or $4 million exposed to the private rental market. They still tend to look after the information. It's paper form, it's a spreadsheet. They're normally working out their tax return the night before it has to be in. It's kind of it's kind of a hodgepodge approach to ownership, and I think having that more all aligned in digital asset management will allow much smoother transition.
I don't know, Jeff, do you want to start with that? Because I think decentralized systems is a great way of getting to agreement on information that ultimately leads to pricing transparency.
I mean, it's a good question and a long question. Regardless of decentralized, you still can't defy economics, right? There's supply and demand, and they're going to set it. You still, if you're going to move it to decentralized, for us to even invest in something, you have to sell it for more, build it for less, or talk to more people, or your commercial model is going to fail. So if you're talking about price transparency, if you make the market more efficient by allowing more sellers or more buyers to have access to an asset, that should push the price up. And if you allow more sellers out there, it should give more liquidity all around. So I think it's the function of creating that ability for sellers to put their assets in an environment where it has access to more buyers. Right now, that's a fairly hard thing to do. For someone to sell a house, they got to go find an agent, they got to list the house, they got to figure out all the comps. It takes them months and sometimes months to figure out where they should price it, and that's a guess, because what is a house worth? What someone's willing to pay for it, right? So if you can create that front end up there that creates that transparency that says every house is for sale and we have a smart contract, it's just price which you're willing to sell it for, I think you'll see a lot more liquidity and a lot more movement there than we see today. And I think decentralized will do that, because I don't think we've seen a lot of the listing companies and .com companies do that, and they haven't really changed anything. Right? You can list your company or your house online. It doesn't really move it any faster than it does today, and most people revert back to agents. So agents are still one of the major costs through that retail value chain is given to them. So I think if you can get it to where you have access and openness, I think you're going to see a lot more movement in the space.
Thanks. Mo, do you want to take
I could take that one. Yeah, that's a great point. So I think fractional ownership is a structure. It's not necessarily the way you want to manage the asset going forward, right? We're creating these digital shares, but the operating agreement that would exist will still be with a sponsor that is responsible for managing the asset. Now, that might be a private equity firm. That might be, maybe it could be you who manages a portfolio of assets, but it allows you to have reputation and continue to run the asset the way you believe is, the long-term strategy of that asset. From a fractional ownership perspective, Mo can invest in that property or in you essentially as that asset manager. And I think, Richard, we were talking about this earlier. What that really does is allow for reputation to build for an asset manager. So if you look at real estate products that are liquid today, REITs are one of them. And they end up trading at a discount to NAV for various reasons, but one of the issues that people like to point out is the management team may not be doing a good job. Now, if the management team isn't doing a good job, I have two choices. I can choose to withdraw my money and invest in a different asset manager. But the reason I would do that, or the tools I would facilitate that, is the reputation on the platform to see who has been returning capital to investors, who's been doing a good job of managing the asset, acting responsibly, transparently sharing information. So ultimately would allow for better outcomes.
Jeff, what do you think? I mean, is this different to any other form of shared ownership of other assets? Or
I think you have current models that exist today that help you with that, right? If you go out and raise money for your company, those that don't want to follow pro rata get diluted, right? And if you can't raise at the value you want to, it's called down rounding, and those that get diluted again. So if you have a real estate asset and you have fractional ownership and somebody wants to redo all the bathrooms and somebody doesn't, they're going to get diluted in their fractional ownership. That's a simple model that you can do. So I don't think you don't have to create new structures in decentralized. I think there are current structures that exist today that deal with price and value.
But it does mean that you're going to be very cautious, conscious about who your operator is. In the same way that you're putting trust in a listed company's management team, you're going to have that same level of trust in the sponsor, that they're going to be doing right by as a fiduciary of your of your tokens or whatever liquid state you have. I just wanted to come back on the transparency discussion. I think pricing transparency in real estate, when you have a very homogeneous type of asset, the ability to get close to there's lots of work going on at the moment around AI, machine learning, to try and get much closer view on what comparable real estate values are. So there's a lot of money going into that already. So I think when you have a homogeneous asset class, that ability to get price transparency will occur, and that's clearly applicable in the residential markets, the single-family units. I think it gets more complicated when you have more specialized assets. If you've got a mixed-use building in New York with some kind of easement and a right of light, that's going to require some kind of professional assessment of value. And I think that's where, when you get to those more complex assets, that's where kind of the advisory world will still be engaged and still adding value. I tend to agree when you have smaller assets that are very homogeneous, that the market will find ways of trading those much more efficiently than it currently does.
I'm going to ask another quick question. We heard a bit about sort of benefits and, sort of positive societal benefits. Are there negative societal benefits? I mean, are there traditional, a lot of people who work in real estate, traditional pieces of the real estate industry, are they at risk of being displaced? And, is there a negative to that?
I think that, the real estate market has been evolving since human beings first created shelter. I think that, and it's not like there haven't been new ways of creating capital structures in real estate. I mean, the REITs was a new way of owning. You had the evolution of the TICs. You've got closed-end fund structures, single asset fund structures. The way I see it, from the tokenization piece, it will just be another way of holding an exposure to real estate. And one thing that's very clear at the moment is that the allocation requirement, the dry powder that's in the market to try and deploy into real estate is very high, from an institutional basis all the way down to the private investor. And there simply isn't enough real estate to sate that demand currently. So for me, I think this opens up more opportunities that will create new jobs. And some people will certainly have to reskill. It's not going to be an easy environment, I think, for people trading those homogeneous style assets, for example.
So JLL, another 250 years.
Another 250 years, yeah. I feel like as I walk around Davos that we're kind of like every management consultant's dream, a 250-year-old company that's digitizing and transferring its things. So hopefully we're doing it right.
And you don't worry about, real estate is notoriously bubbly anyway, and if you get a flood of dry powder into real estate, does that make it worse, better, or?
I think increased liquidity makes that whole journey much easier. It makes the journey smoother. It's not like some of the other asset classes aren't volatile. So I'm not sure that we want to go the whole way down the equities market or Bitcoin.
Sure, I can kind of take you through that. So the smart contracts that we created have validators. And sorry for getting technical here. I know it's 5:30. On the technical side, these validators capture two groups of logic. The first is the regulatory logic that we need to encode. So, you can't have someone who hasn't gone through KYC and AML to own these shares. You have to be an accredited investor. You have to live in the United States, so on and so forth. The other types of validators we have are validators based on, just industry-specific attributes. So real estate-specific for us might be these smart contracts need to have a copy of the lease or of the title associated with that property on that smart contract as well. And that's kind of what we build for Meridio. Now, what we're going to continue to enhance that, and a few months ago we launched our leasing application, and maybe going back to the point of transparency, you might have leasing information on there. But from our leasing app, what you can effectively do, and maybe talking about disruption as well, co-working is a big thing. So imagine you and I wanted to share a desk for the day. You can go on our Coinbase wallet, log on to Release, and sign a lease and effectively pay using Ether. Now, that may not be that exciting, but on the background, what you're effectively doing is executing a smart contract and a legal lease, and you're paying for it as well. Where in the past you would have had to rely on an auditor to audit the lease and the cash flow associated with it, that's all automated. And because it's decentralized, you don't have to worry about the trust component of Meridio controlling it's all on chain. You can push that a step farther as well. So now let's say everyone in the room owns that desk and are investors. So if you and I leased it and they want their dividends at the end of the day, all of that can also happen on chain. So we can push or automate via smart contracts a dividend distribution to all the shareholders via a smart contract as well. So that becomes really exciting, going back to global capital markets from a real estate perspective, but you can apply that across industries and asset classes. And that's where I think smart contracts are really powerful.
I think you got to first understand decentralized. What it really is right now you're trying to reach consensus on, and it's largely a ledger, right? So you're not doing everything on the blockchain, right? And it won't have everything on the blockchain. And I think we have to start from there. If you look at that part of it, it's never been hacked. There's been bad code. Just like you go to your bank account and find you have $1 million in there, your bank wasn't hacked. They had bad code. So there's been bad code, and there's some governance issues and branching and things that are going on. But from a consensus perspective, it doesn't get hacked. So your security there is spot on top. But you have to understand what you're going to put on, what you're going to put off, and the stuff that stays off chain. And there's sharding technologies and all these other things that are coming. But what you put off chain now, you have to understand what's the interoperability between off and on chain. And where and what is going to sit where. So when we're looking at things that are industrial strength, because we're trying to attract industry to come on to these things, not 3 guys in a garage building an app, right? So for industry to come on, their data is their IP, right? They're going to be very, very cautious of what data they put on, but and so you have to understand those things. So I see a lot of things that the blockchain does. I think it increases privacy. I think it increases security, but you can't do everything on there. Are we anywhere near what the regulation should be? No. And if you heard my CNBC thing, I think it's 3 years before we really start to see the upflow that we need to see, where industry will start to participate with it. But we also have to be very clear when we're saying open decentralized systems. I'll give you another quote. IBM is not doing open decentralized systems. It's really good supply chain software, but it's supply chain software. So we have to, and so we're not seeing the industry participation that we want to see. So, and they're standing on the sidelines waiting for the technology to get to the speeds that it needs to do things. And they're also waiting for some of the regulation and some of the people to come out with what is the right governance here, what should be on chain, what should be off chain.
Just to be clear to everybody, keep giving Jeff a bit of a hard time because he said on CNBC earlier that Bitcoin was going to zero, and he sent it in that direction by saying that. Just, Richard, you mentioned that you're kind of a case study. JLL could be a case study for management consultants. Are traditional real estate companies doing anything, or are they just sort of sitting watching this wave?
No, and again, to a certain extent, when the company's clearly there's no one in the company that's been around since the 1750s, but you don't survive that long without constantly trying to ensure that you're innovating and reinventing yourselves. Now, I think the real estate industry has been slower to adapt technology, frankly, because it's under less pressure. Things take longer to undertake, as we've very clearly described, not just the transaction process around a buy, a sell, a trade, but also to lease, to set up a new management contract. This takes time, and I think the technology gurus from whether it's in Israel or it's in Switzerland or it's in Iceland or Silicon Valley, it's just not been the really sexy area to kind of get engaged in. But that kind of changed about 18 months, 2 years ago, and we've seen a lot more money coming into prop tech. And like any hopefully well-governed listed company, we're taking that very seriously, and we're trialing. We're trying to not do death by 1,000 pilots, but we're definitely piloting an awful lot of technology-driven business solutions, and everything from technology applications that will have an impact on the occupiers in buildings and how they experience their life in that building, through to the work that we're doing together with Mo, through to new ways of rapidly underwriting assets from a fund management disruption perspective. So,
Jeff, would you expect sort of legacy companies to be the ones that are able to adapt to this, or would would you expect it to be coming from somewhere else?
Well, I think, let me give you a couple parts on that. So first of all, in blockchain, to even get to a door where we would actually deploy capital to you is, and we both build and deploy, so we're an active investor, so we're building as much as we're deploying cap, is that you have to say, what does decentralized technology fundamentally solve that centralized technology can't do? So if you say yes to that, now you pass that goal. Now you tell me, what are the new commercial models? And usually those commercial models mean that I talk to more people, I can sell it for more, or I can build it for less. Now, once you get that done, then you need share. And this is where it lends back to industry. So if you're a producer, meaning you produce something in the industry and you have share, you're going to be one of the commanders in these spaces. You can bring the volume. Without the volume, the tokens are worth nothing. So minus this irrational exuberance that exists today. So you need volume to get there, and that's where the industry participants come in. Now, if they're producers, this is a real advantage to them. Now, if they're an intermediary, this could be a potential big threat to them, because ideally, in decentralized economies, you're going to disintermediate the intermediaries. So my view, at least the conversations we're having with a number of industries, there is a lot of willingness to do this, and I think they'll move to it. But you got to get back to those fundamentals: is what is this decentralized tech solving that the centralized tech can't do, and then what are these new commercial models behind it, and then how do we bring the volume to the platform?
Yeah, so I think Jeff said this before. The governance models that exist today are still going to be the governance models that most likely will exist tomorrow. We're not going to diverge significantly from the way people behave in ownership. We'd of course love to push that a bit and allow for input from shareholders if this is fractional ownership, but I don't see much change. And in fact, you can control it from a different perspective and say, we don't want the input, and we don't want one outlier to buy 51% and then be majority owner and drive direction in whichever way. And I think, again, that going back to why smart contracts make sense is you would have been able to prevent that scenario from actually happening.
We're getting pretty close to the end now, so I just want to ask for some sort of very forward-looking ideas. So, Mo, how long do you think? How many years is it before the sort of things we're talking about are commonplace, and we're not sort of sitting at a panel here talking about them because we're actually out there buying our houses this way, or leasing office space, or whatever it is?
Sure. So I think there's a few ways to answer that. Tech is evolving at incredibly fast pace, and it's driving human behavior in a very interesting way as well. And I think both of those riffing off each other, I see a pretty significant sort of upside from a 2019 from an adoption perspective. And what gives me more confidence in that is, the hurdles that we saw in the past in 2017 and 18, whether it was behavior-driven or regulatory hurdles, are starting to be alleviated. Coupled with industry players like JLL really thinking, how they see their business evolving and how this technology can lend itself to either enhance and augment existing business lines or create new business lines in the future. And that hopefully allows JLL to be here for another 250 years. So, I'm pretty optimistic in adoption from a 2019 perspective. I think a lot of the industry players and the uncertainties that existed are again being alleviated.
Jeff, same sort of question.
Well, I said yesterday, the protocols first have to get better performance, right? We have a ticketing platform that's creating entitlements that if we sold all the tickets in the Rose Bowl on Ethereum, it would cost $9 billion. So $27,000 a ticket. It's irrational right now. There's not enough speed, and we need the protocols to get better, and Ethereum's working on it. Definity's got a pretty significant upgrade to it. I think that's a broadband play to the internet with Definity. But we don't have any of the infrastructure in place. So we need the middleware. We're working a lot on the middleware. We need tax, we need arbitration. If you transact in crypto, it's not legal tender. it's cap gains. So we've got a lot of things that have got to get in place.
Yeah.
And once you see that in place, then I think you'll see this explosion where apps really get commoditized and apps will become more fit for purpose. So if you think about Uber, where it's matching drivers and riders, and I'm not saying we're just disintermediating Uber tomorrow, so don't vote that, because I don't need any more Uber drivers getting mad at me. But Uber is a centralized play, right? In a decentralized play, you take that vertical of Uber and you make it a horizontal, and then you get a whole lot of fit-for-purpose apps that are creating ride-sharing. So I see the next 3 years getting the infrastructure in place, and then I think you're going to see that hockey stick movement.
Is there a sort of key moment you're looking for? Is there a piece that drops and it's like, now we're off to the races?
I mean, the key moment for us when we deployed capital was when we saw Definity. I mean, Definity is an infrastructure that's largely going after AWS, right? It's a more secure, better platform for that purpose. And it's 600 times faster than what Ethereum's running at. So that for us is there's a step change. That was the penny drop. That's what caused us to move over to really get behind it. Now we're going to see, hopefully, all of these performances move. And as Mo was saying, it's kind of moving at an exponential pace. So we'll see that. But we need that performance there, because otherwise that will limit its use cases without the performance. And then most importantly, we need the infrastructure. So over the next 12 to 36 months, we're going to be focusing a lot on investing in that infrastructure to get that in place. Once those two things are in, very similar to what you saw in the internet in 2005, once broadband hit, there was the hockey stick. You saw a lot of that irrational exuberance in 99 and 98, where everybody was coming up with something, a business model. All of those fell over in 2001, 2, 3, 4. And then 2005, we saw the performance upgrade with broadband, and then you saw the hockey stick. I think the same thing will happen.
Richard, have you got a sort of timeline in mind for blockchain in your world?
I think whether it's blockchain or not, real estate is going through a technology revolution, and I think blockchain has a role to play to enhance the liquidity of the real estate asset class. And I would see in 5 years' time tokenization becoming maybe not mainstream, but certainly a more active opportunity for people to deploy capital. It's a little bit more accessible. It's kind of more democratized in the way it can attract capital. So I certainly see it being another financial structuring that's available to private investors to deploy capital into real estate. But overall, I think technology is moving at such a pace in this sector that real estate has got a real potential to start performing better, because when you start using technology to really assess how people are using buildings, you get an opportunity to influence how they use them in the future, and it ends up being less of a cost play and more of a productivity play, and that's a really exciting place to be. And blockchain, and particularly the elements of smart contracting, enabling people to have access to information quickly and to contract quickly, I think will just make all of that much more frictionless.
Do you have a key moment in mind, a step change moment that might come along, or is it not quite like that, not the way you see it?
I think Mo and the team and many other participants in the blockchain community, it's how quickly they can establish the technology that Jeff was describing here, but also how well they're interacting and how well organized the industry is in how it interacts with the regulators. Because regulation, in the end, this is a minority interest in a financial interest in an asset. It's going to be regulated, so having that relationship with the regulators is going to be absolutely critical.
I think I'm a pretty big skeptic of a lot of the business models that are existing out there today, because I think everybody's taking something that exists today and just trying to make it blockchain. So I think a lot of that will go away. But I'll tell you, of a few hundred CEOs that I've met with last year, decentralized and blockchain is 1, 2, 3 on their agenda. So there is a general interest of industry to participate in this, and now it's just the questions of how.
I think another thing to keep in mind is, logging on and, buying crypto today is not the best user experience. And building blockchain applications is not easy. And in order for us to get adoption at scale, we need to make sure we're building, from an application perspective, a very familiar experience to the Web 2.0 world. So, everything associated with smart contracts, as complicated as they are, we want to abstract that and put that in the background. And just again from a user experience, we don't want an additional hurdle or friction to occur. So going back to when we see that switch moment, it's going to be the developers that are developing on this technology create that seamless experience as well.
Thanks.
It has to be a great customer experience, otherwise no one's going to use it. And in the end, you've got to create a great user experience. If the technology's not up to it, people won't use it, people won't adopt, and it'll die a death. So.
If no more questions, I think we could probably wrap this up. But thanks very much, gentlemen. It's been a real pleasure. I've learned a lot. Hope everybody else has. Thank you. Thanks a lot.
Thank you.